Jess, you're a market analyst and the ASX keeps hitting record highs. What factors do you think are pushing the market higher, and how long is this rally going to last?
Well, great question. Well, the Aussie economy is growing stronger than expected. So it's growing or set to grow at 5% this year. That's according to the RBA. And this is supporting share market growth. So I guess if you pin it down to two major factors that are driving markets higher, it's really employment growth and changing behaviours of how we're spending our money. As for how long this is expected to last, well, there's more people in jobs, there's people borrowing more, so borrowing rates are at a record all-time high, saving rates are at a historical high as well. So as long as employment continues in this upward trajectory, we're expecting this notion to continue. And also keep in mind that July is historically quite a bullish month. So it's also important, I guess, to reflect on the longer term factors and the longer term trends that say that markets historically have risen over time. So I guess with this in mind, I'll just leave you with a thought. If you invested, say, $10,000 30 years ago, perhaps maybe your parents did that for you. But look, if you forked out $10,000 into the market in 1990, and then you pulled it out last year in April 2020, you would have pulled out $114,000. So I guess, the market moves in cycles. There's downturns and there's rallies. But the really important takeaway here is if you were to sell in those major falls, there was two bear markets. If you sold in those technical downturns, you would have crystallized your losses and sold at possibly the worst time and missed out on the recovery. So remember, there's a lot to be said about being a long-term investor.
Now, Jess, can you give me an example of sectors that are poised to go well in the future and maybe a stock you think is positioned to benefit as a result?
So I'll say two, tech and food and agriculture. So thinking about technology, the tech sector is set to be really supercharged for two key reasons. Firstly, the US government recently announced that they're spending a record $250 billion on the US tech sector, really to compete with China and Asia. So given the US wants to become the world's biggest semiconductor manufacturer, they'll be making electronic circuits for computers, phones, electric cars, driverless cars even. And the second catalyst for tech that will drive the tech sector higher is demand. So we know demand is likely to grow for technology, particularly given that 30 countries around the world plan to be carbon neutral. So semiconductors will be needed because they're, of course, a key component in electric vehicles. As for how to capitalize on this, Lelda, there's $50 billion being spent on US semiconductor firms and also attracting foreign firms to open in the US. So if you think about the ASX companies like Altium, that could be tapped on the shoulder, that might be worth your while doing your research there. So Altium, for instance, ALU, they already have facilities in the US. So they make, for those that don't know, they make the microchip boards that are inside Dell computers and some Microsoft PCs as well. And they also have circuit boards that go into coffee machines. So ALU shares, they've had a pretty good run this year. They're actually up 30% this month on the back of a takeover offer. They later rejected that. Most brokers are actually bullish on Altium. So expecting their shares to move higher. However, a bit of caution here. Altium has already flagged that they could potentially miss their revenue target. So just keep that in mind.
And finally, Jess, could you give me an example of stocks you think that will perform well in the longer term?
Okay, I guess if you're looking for undervalued businesses and prepared to be patient and invest for the longer term, you could invest in technology and utilities. And the reason that I say that is because both of those sectors are underwater this year. So thinking about tech, Afterpay is perhaps worth a look. It's the biggest tech stock in Australia, dubbed to be the world leader in buy now, pay later. So last year, Afterpay shares had a cracking year, up 300%. This year, they fell from $160, getting as low as half of that. But they're tipped to see a rebound. Why? Because Afterpay is set to launch a new app to compete with the banks. And this is touted to double their revenue and also boost their brand presence. So this will be a huge win for Afterpay. Morgan Stanley, for instance, is quite bullish on the back of this, expecting Afterpay shares to get to $145. But if you just are looking for stocks, if you just think about the key drivers of stocks, that should set you up well. So look for earnings growth and companies that are in strong growing industries.